Good afternoon and welcome to GrainTV. It's May 9th, 2013. I'm Logan Burgess. To my right is Cody Bills. So Cody, let's jump into Fire Tip, see how the grains closed out the day here on a Thursday. As you can see, we had a lot of strength on the board. July corn picking up 15 3/4, soybeans up 18 on the July contract, Chicago wheat picking up 17.5, Kansas City wheat up 19. If you guys want live quotes at your home or office, visit us over at grainhedge.com and you can get some live quotes going for tomorrow's USDA report. Cody, looking at this morning's action though, the big fundamental news was the export sales report. What did we see there? What's kind of your take on that action?
Yeah, well, we had actually some pretty good old crop sales for wheat and for soybeans. For corn, we actually came in a little bit under analyst expectations, but it wasn't that bad. It wasn't terrible for the corn market in terms of that old crop. Let's take a look at where we are in terms of meeting these USDA expectations here. This is the chart for corn, and it's showing you, the bars are showing you the actual export sales that we booked. The yellow line is what we need, the pace that we need at that time to meet the USDA expectations. You can see this week, week 35, we're well below what we need to meet the USDA expectations. We actually slipped in terms of our position by about 3.3 million bushels. Soybeans, on the other hand, a little bit different story. After 2 weeks of cancellations of old crop sales, we finally booked some pretty solid sales here this morning, 193,000 metric tons, very solid. Soybeans are about 72.1 million bushels ahead of the USDA, ahead of the pace needed to meet USDA expectations, and we actually we did slip a little bit, about 2.8 million bushels, but bottom line, we're hanging in there and we're ahead of pace.
Yeah, you know, Cody, right now on old crop soybeans, you know, we're coming off here 2 weeks of net cancellations. We do have South American soybeans inbound here to the U.S. market. So we've been talking about those two issues as kind of weighing on this soybean market. But if we hop back here into the July chart here, you can see that today we had a little bit of a breakout. It seemed like we closed toward the highs and we made it above some of those key technical areas that we talked about yesterday on the show. It certainly seems like, in my opinion, right now we have the cash market supporting some of this action. If we take a look here at a chart here of spot basis compared to the July contract at a Decatur, Illinois location, you can see that right now basis is north of plus 120 over that July contract. You can see here the red line is the 3-year average. So we've been talking about it a lot. We know the cash market for beans has remained very strong historically, but we're seeing the spread between the historical average and this year's basis even get wider now, as you can see here just in the last couple weeks. I know we were talking about that a little bit before the show. That's partly due to the roll effect here coming off the May contract. We had May closing today up 83 cents over July, but certainly a lot of strength there.
Yeah, absolutely. That strength in the cash market, I think, is going to support the futures market as well, especially when you look at this. This is pegged off of the July contract. You know, we're going to go, we have another month or so that we could continue to trade, you know, either sideways or higher. We're at unprecedented levels. It's going to be interesting to see just how high we can go, but these are great basis opportunities for producers out there. One of the things that is kind of interesting is it really seems to be a dichotomy between international and domestic markets. The domestic market, we simply just don't have that much soybeans domestically, and that's why you're seeing basis so hot here. When you look at the global scenario, you know, there's a lot of beans coming out of Brazil. They're catching up. They're making the sales. They're moving it onto the market, and you know, it turns out that the U.S. is a buyer. So of course we're going to have very blazing hot basis here, especially in the eastern part of the Corn Belt. Maybe even to attract some of that that North Dakota soybeans down into those areas of demand.
Yeah, absolutely. At some point here, we'd expect this basis or the basis to collapse a little bit. Is that going to be done by actually moving basis lower or the futures appreciating? That's anybody's guess. We're thinking here it's going to be a combination of the two. So certainly it lends some credibility to the bull camp out there on old crop soybeans there. For anybody that's a producer out there holding old crop soybeans right now, this is certainly a very good selling opportunity. This might be a good time to clear out those bins. If you're still bullish the old crop soybean market, you can pick up a $14.50 call here for 19 cents today. If you have any questions about that, you can certainly give us a call. And just take a look here at Central Illinois in general here. Basically, this is a tool that all Grain Hedge clients have access to, and you can see each one of these points here is the basis over the July contract here. And as you can see, we have a lot of bases that are approaching that plus 100, and this market right in Decatur is the one that we kind of highlighted today. So this can be a great tool to kind of help you find extra cents in the cash market. If you want to take a look at that, or or get those live quotes for tomorrow's report, visit us over at grainhedge.com or give us a call at the office here, 877-472-4607. In general, I think that wraps up what we saw here for Thursday, Cody. Thanks a lot for joining us. We'll see you tomorrow for the USDA report.